Okay, hi there, guys. Just let me know if you can hear me. We'll see who's here, and we'll get up and running. Just keep an eye on DCN. Sort of see where that opens. 26.5 at the moment. My luck to open at 27 or above. G'day, Andrew. How are you? All right. G'day, Lauren. All right, let's rip into it. Only got a few in at the moment. We'll probably get some dribs and drabs in as well. So the US come back after the holiday, long weekend though, and the market was pretty much heading south. Anyway, I think the Dow futures were down a bit, and then the US opened and it was dragged lower. Um, they've got a few issues with obviously the tariffs that were put on, and they had some manufacturing data, which was probably the key, which drove the market down on the open. Manufacturing data, which was flat, a lot lower than expected, showing that tariffs are really causing a bit of havoc in the manufacturing and what was it? I can't remember what else data they had out, but it's basically slowing demand. So they're really relying on consumers to just keep buying. Now, to me, I don't know about you guys, but if prices keep going up because of tariffs, I think I'd be slowing down the buying, um, depending on what it is, or it's just gonna kill it a bit. I'd say anyway. I wouldn't say the consumers can buoy this market. So it looks like there's a lack of investment into the US too. They're showing that investment's really dried up, company investment. That's probably what I was reading was that they've got a lot of stock on hand at the moment because of, if there's tariffs imposed on things, it means that you can't clear as much stock. You might be making the same return, but you're not clearing as much, which means, that in turn is going to reduce in manufacturing. There's no need to manufacture more while you've still got the stocks up. So I think all in all, that's going to crimp the economy quite a bit. Whether it's, if retail keeps buying, but at the same sort of levels, as in, I would assume, well, the way I see it, this is just my uneconomic view, but g'day, Bobby. I sort of the way I look at it is if you've got a certain amount to spend, all right? So if it goes from $1 to $1.50, essentially you can buy less because you're only spending the same amount. So it's not that I'd say the same dollar terms are coming in, but the number of products being bought or consumed or whatever it may be because of higher tariffs is coming down, which means it's that flow-on effect that we're seeing um, into the economy. So if consumers just keep doing the same thing, it means that companies are still going to slow down in a broad, in very broad terms, I guess. And that data come through last night and showed in the US, and that's why the US got knotted on the open pretty much. So yeah, down 200 something points in the Dow, down 20 or so on the S&P, the broader market. So they're both heading south. We're looking to open somewhere around the 30 to 40 mark. I'll just see where the SPY size is open, and it's heading south. We're looking potentially, if this holds as a lower high, where potentially that's going to creep down and push through 65.01. But where the SPY finished somewhere around here equates to around a 40-point drop on the ASX from the 4 o'clock close, which is up here. So all I'm really doing is measuring where it closed at 4:53, where it closed overnight, which is somewhere around 16 mark thereabouts, so 35 to 40 points. And then just sort of looking to see what happens in between that time and what happens on the SPY and the open. This SPY just starts racing down. Forget about your down 40 and look to down 50 or 60 on the open as people get a bit nervous. So there's still a fair few bears out there, and we had gold. G'day, Mark. The thing is, which I think, let's get up the charts now, is gold being very buoyant. Let's just get over to gold. So gold was chopping around through here and started lifting prior to the US Open. So it started, pushing up towards that sort of, the top end of that range we've been talking about at 1530 thereabouts, 31. And now is it pumped through it. So it rallied right up to these highs, and potentially this sort of cup formation looks like it could extend through. And at the very least, you'd expect it to potentially attack that high. What was it, around 55? So $5 or $6 above where we are. I'd expect it to wash out at the very minimum these highs. What the market loves to do is chase stops, trigger them off, and then from there, it's whether it generally they don't chase stops and then stop and just stay at that level. They then chase stops, selling sort of spikes into it, and then is that selling going to get soaked up again at a higher level? So we could spike higher, pull back, build a higher low again, which is a sign that we're going to see some further bullish action, or whether we get this deep correction and then start to really chop around below and potentially a lower high to squeeze out some of these longs in this move. But longer term, look at that structure, that price action, headed up, consolidated. We did wash out that low, and we were looking at this level, let's say at 1492 for quite a while. Kept testing, broke up, and we've had basically that 1-2 moves down and really shallow sort of retracements to 1519 or 1520, where we've lifted again and we've lifted up. So this is a good enough, I guess, consolidation on the pullback. For expectations, we're going to move up and through the highs. If that plays out, you expect there's more pressure on Wall Street, or it's equating to more pressure on Wall Street, in the Dow, the US, and all that, in Germany. So everything we're looking at, that data out last night was a big heads up, and we're probably looking at, I guess they're factoring about 90-something% chance that the US is going to cut rates again in the next meeting, which is soon. I think stimulus is expected from the ECB on, I think after their meeting on the 12th. So another week and a half or so, if I can count. Yeah, another week and a half or so. So the reserves around the world are pretty much going into overdrive, trying to stimulate this market. But I think that the bull market in the US has been about 11 years. I think it kicked off on the lows of 2019, 8. So 7, 8, 9, 2009. So it's about 10, 11 years going, kicking higher. So and that was just, from the lows of the GFC, really. So you've got to expect some sort of bull market like that. It's just been constantly going up, making new highs. Just can't keep going forever. Nothing goes forever. We should all know that by now. So it's going to be interesting to see what we do going forward. I think it seems to be that the equity markets, if there is a bear market, you've still got, the inverted yield curve, which is hanging around there. Now that caused havoc a while ago, and they seem to be forgetting that now. You've got, I think we're all just waiting to see what happens with the trade deal, whether there's something now. If you're reading the news now, it doesn't look like anything's happening anytime soon. They're going to keep whacking on tariffs, probably having a bit of a banter. Trump loves to talk it up a bit, but realistically, he's been doing that a lot and nothing's happened. So that effect is going to be, they're going to drain the market from the buoyancy it's going to get from talking up all. We're in talks really well, but there's no talk scheduled for September. Yet he's still saying that talks are going well, and he's been caught out a few times that, saying talks are going well, and China said we didn't even talk. Does that remember that? You just say we had good talks on Sunday over the weekend, and they go, well, we didn't say anything. They weren't even. So it's just rubbish that he's talking, and I think the market was starting to cotton onto that. And if this market tips over, he can't. There will come a time when he won't be able to save it. He might get, all the reaction from his tweets is going to be muted, and the market's just going to tip over eventually, you would think. So in saying all that, I don't like to say I'm a bear, but I think I'm still bearish. We've got a few that someone pointed out in the chat, Laura, that I've got my bear suit off a little bit, but there was a couple of setups that looked okay, and that was potentially if they'll probably get cancelled today because they'll touch the lower end of the of what we're looking at. We normally put in, say, a buy entry, and with a buy exit, say if you get in at a certain level, say you get on the break here, there's going to be a stop below. But if it doesn't trade the entry first and it trades a stop, it goes down and trade that level, then we're just automatically cancelled. So I think there's going to be a few that are going to be cancelled today on this movement down. Just see where it's opening now. Hasn't opened, so it's going to start. Actually, should have started soon. There you go, down 14. So it's not looking too crash hot. See where the SPY is. See, the SPY looks like, you can see that. It looks like it's going to be ticking off through that support zone. Let's just get onto a 5-minute chart. It's not too crash hot. Very hard to trade this sort of thing because there's been a lot of times when it gaps down, they remember on the open, especially in the SPY, it likes to wash. It'll wash either way. So sometimes it's very hard to see or to get an idea whether it's just going to go straight down, straight through, which it looks like it's going to now. I mean, to sell down here, pretty ballsy with your stop above there because it could easily retrace, form a lower high and then go. So you want to be trading off the back of either lower highs, which is once the market starts to settle in, you might get buyers will step in down here on these lows going, okay, it's nice and cheap. I think the market's going to bounce like it has the last few days, bounces back up, and then you get your lower high come into play and really to put pressure on them. So that's when things start to show their hand a bit more. Buyers and sellers start to show their hand or who's going to win. So wouldn't be selling down here. No, at the same token, on the flip side, I wouldn't be buying because it could easily spike through those lows. So it's a bit of a tough one to trade to spy on the open until you get some sort of direction or some sort of bias where you know where you're going to put your stop. I mean, I don't think this was the open yesterday, or was it? Get back here, get back here. What was that? That was the open. That was midnight. Well, not much kicked off yesterday, to be honest. That was the open yesterday. If you can see what we're looking at here, the same sort of reaction. Gap down on the open, started bouncing. No, that wasn't it. That's what I traded the day before. All right. So that open second. Where's the third? All right. I don't know where we are now. Just trying to find the open from yesterday. It was about here, was it? Oh God, I'm going straight past it. So that was the open yesterday. No, it wasn't. I'm getting there. Okay, it was around here. So it opened 9:55. Markets open, pressed down, and just pushed up. And that was, I figure, a kind of tough one. You might have had a buy here, but then you would have chipped out, buy, chipped out. So it was a tough environment yesterday. I didn't see anything that really kicked on. You could have had a few entries, potentially on the long side, but we had too many numbers. Numbers at 11:30 you had to worry about. So coming to 11:30, you wouldn't want to have had a position. You probably could have got stopped out or something. And then at 2:30 again, we had RBA announcements, which kept rates on hold. So yeah, it was a tougher trading environment yesterday, and there was no lead from the US. So that's why I was just standing aside. And as it was, there wasn't much that played out that would have played out. So the numbers at 11:30, retail sales come out about here on this candle. You can see it was already choppy before that, and then come 2:30, where were we? 2:30 was this candle, this red candle here, so it spiked lower. The market tipped over that into the close. So there probably could have been a sell here, but after this sort of price action, it was a bit, it was a tough one to sit on the sell side when you've seen the market was bullish into a resistance zone. So yeah, that's not looking very handy at the moment. So I'm assuming it's going to open down, probably down 50 or 60 points. So just keep an eye on that, guys. Let's take a look at the overnight markets just to see what's happening. DCN, where did the trade open at? Don't tell me we opened at 26.5. Fantastic. So we're in at 26.5. It's 27.5. That to me is quite bullish. This is that inside setup we were just talking about. Market's creeping higher, holding higher lows. Now it's sat on top of the MAs. Again, it's sat on top, and you've got a minor higher low here, and it's just pushed through that higher 125. So we'll see if that can kick on, and really next stop would be at least to push through. You would expect to push through the high at 143. So leaning towards closing the gap around the 160 mark. So I think at the moment I like this one because it's some exposure to gold in a stock that's already been, it's been cleaned out on the long side. So with this move down, it got smashed, obviously, and it's been bouncing back. This could easily just tip over from here. It could close the gap. We don't know, but it's still, I suspect, a good little exposure to some gold or to the gold play. So we ticked off at what did we say, 126.5. It's up a few percent already. Nice. Still at 127. Excuse me. Where they open at 127. Oh, so 127. Is that right? Low 126.5, open 127. It's 127. So that was sort of our top end. On days like today, just as another, for anyone that didn't know, doesn't follow us on the alerts, that entry is at 125.5 through the high of 125. Yet today, it didn't trigger yesterday. It was getting there, but you knew today when gold's up 20 or 30 bucks, it's probably going to gap up. So on days like that, you don't want to be chasing it on the open. You don't want to just forget about your stops. You've got to manage them a bit better, or put yourself a limit. Watch the open, trade the open. If it doesn't open too high, you can take the risk that it's just going to keep going. But if it gaps up quite strong, there's a good chance that it might pull back because you're going to get retail come in, gets to a certain level, it's just no one wants to buy it, pulls back, then you get the second level of buyers come in and just see where that pullback comes to. It's never a great idea just to have a buy and stop, and that means your risk is a lot wider, and sometimes you're better off just waiting. There is the the opportunity that you can miss it, but that's trading, isn't it? Let's take a look at the US. That's gold. Let's take a look at Wall Street. So this is the Dow looking heavy, but in saying that, that looks like a grind lower, and I'm never inclined to think it's going to tip over like this. It could easily. Don't get me wrong. This could just tip over from here. But that, once we got through those highs and we're starting to contract, that contraction is more. See how it's more. What do you call it? What's that word I'm looking for? I wouldn't say refined. It is more controlled. That contraction lower is more controlled. Pop up and it's straight back up, holding a lower level down, but that sell-off was buoyed straight again, lower level, okay, bang, down, reacted straight back up. So we could be holding a lower high here, which I would assume coming into the Asian session. Once the Asian really kicks off, I'd expect that to trend lower, being dragged down by the Asian market. And if it's going to be buoyed, it'd probably be buoyed into the open of the US. But at the moment, that's trending down, holding lower high in the hourly chart. The US looks, this could be a level which is going to be a higher low at 28.90. So I'll be looking for, if it starts to push up above, maybe sort of this level intraday on the hourly anyway, at 29.14, this could get another push up to that 29.40 zone. But this the overall structure is well and truly capped at 29.40. You've got these reactions getting bought up on the dips, dip in here, straight back up. But there is some selling pressure still in the market. So we'll just have to wait and see how that plays out. It's really going to be played out in the next couple of days, not just tonight, I wouldn't think, but played out in the next couple of days. So this is one thing to watch. That action there doesn't look too bad at all. And that's that sort of move we talked about, push up into resistance. It just did wash out those highs, pull back. If that can consolidate, we could easily get back up and through 29.40. Don't know what the fundamentals would be about that, to do with that. Probably they're always looking at something positive, inverted yield curves not, recessions not. What's happening in Hong Kong, they're probably China's going to go in. Wouldn't say that's a positive. The only thing is the rate cuts. Now, again, you don't cut rates because it's a healthy economy. You cut it because you're trying to stimulate. Now, when you don't have much room to move, how much can you stimulate? We've had some negative numbers out. The US is pretty much banking on the consumer to keep buying to support the economy. But I think that's the likelihood is not high on that. There's only so much they can do. So I think I'm still bearish on the overall market. But I'm just saying this could, if you start, selling in here, you could easily get cleaned up with a pop just because of this action. The way it's looking a little bit buoyant. I mean, it could easily just roll over. If it rolls over, holds this lower high in here, bang, it could easily go straight through. So just bear that in mind. If we start tipping up towards that level, it was at 29.13. It's only about 10 points higher, and wash out that level, we could easily start dragging some buying. And it could be short term, come into the US session, it could be intraday, and then coming into the US close, get smashed. We don't know, but just be careful of that. Germany, they're still holding up here. That's a good little reaction high. Break through that 18 was 11.850 zone. We're chopping around here. That's, again, that's starting to look a bit heavy too, but we still got these key lower highs in play with this overall trend up off 11.320 is still, had a good correction here. So the good thing is, well, for the bears anyway, had a move up, pull back, higher low. That is probably even sort of extension, which it pretty much is. Look where it comes to. So it's a good habit to get into when you can pick out the key levels. That's one leg up before we get this decent correction. And this is your second leg up. So we come into that resistance zone around 11, say 12,000. So this could be a prime level for this just to tip over. And it could drive right through these lows back down to 11,370 quite easily over the next couple of days. So keep an eye on that. That's looking more bearish short term than bullish. And UK, they're right up in their resistance zone too, and they're starting to back off from that. And they're looking a bit bearish. Don't forget they've got Brexit to contend with. So, all right, gold. All right, let's just see. I'll get rid of that. Let's watch it down 55. So it's going to be down about 60. Yeah, it's down 55 at the moment. So just finished opening, so it's a weaker open than expected, expecting down 35 to 40, another 20 points lower, which to me is going to happen more often than not, because the market just likes to chip through some levels, really clean them up on the open, take out some stops and really clean a few people up. So let's just see. So if you're trading intraday on the SPY, you'd probably be wanting to be biased down on the SPY. If we can fill out the rest of that data, that'd be great. Let's just put it on the 30-minute chart. And it has come off these highs a bit, but I'd be looking for, I'll be looking for some sort of pop to sell into. So I think even if it does, if you do rally and you get this lower high forming, you get this opportunistic buying, push it up, then you get it stalling below this low at about 65.20. If it stalls below there and you get a lower high and the market's extended on the upside, it's getting overbought, but at a lower level. If that, remember what we're talking about. Even if you bias down, you get your entry down, and bulls start to come in a bit earlier. To hold it at 65.01, you could still be up 5 to 10 points anyway. Or the market could absolutely get creamed, and you could head south and you could get 40 points up your sleeve or 30 points up your sleeve. So to be buying it against a trend on the 30 and against a trend on the 5, off these lows is a lower probability setup, and it's very hard. The amount of times that was my biggest problem, was always trying to go against the flow. So it's a tough gig, and it's not a high probability move. That's the open. We've still got that 6,600 level extending down. So the ASX itself looks like it's heading down towards that 6,400, which is another 120 points lower. We'll just have to wait and see. So we'll see what plays out today, what plays out in the US tonight, if it can get some sort of buying support. But again, I'm not leaning towards that. Anyway, guys, any questions? Before we go, what is everyone looking at? Let's just see if this market can kick off a bit. NXS, that's a buy recommendation we had on for anyone that's looking, is watching that. We're probably going to cancel that because I think they got divs out. It was due out. I think they're due out today. I think it went ex-div today. Was it the 4th? No, it was the 4th, I thought. I'll find out, because if that's ex-div and it hasn't dropped on the open, that still might be a bit of a buy, but we'll see. All right, guys, we'll call it a day there. All the best. Any questions? AUDCAD. All right, let's just have a look at those two. See if we can do that quickly. AIZ, Air New Zealand. Yeah, we're up slightly today. Not too bad in a real bearish market. Now that, to me, that action is looking more bullish than bearish. It's just extended. So you can see the market's extended up here. We haven't got that high. I think if the market tips over, I'll be standing aside on this. They've done 1,000. It's a $3 billion market cap, and it's done 1,000 shares. There's a massive offer. What is that? 75, 275. Seem to be capping it up there. And I don't think we're going to have the oomph to get through that today, at least, especially when the market's overextended on the upside. So just be careful of that one. Same. This isn't a downtrend still on the weekly. We're overextended on the weekly. To buy up here, I'd say it'd be a low probability, especially in this environment. You could easily nothing to say you can't just hold off. If this sort of thing happens, we got up around this stage, you overbought here, and you get this sort of pullback, and you see on the weekly, you get smacked, but it's holding up quite nicely, then yeah, it could be a buy. But at the moment, I'd be just waiting to, at least the MAs cross, potentially just get pull back to the MAs here. If they start holding around 65, 70 off this zone, say 65, bit of a pullback, some volume comes in, stochastics give a chance to pull back, take some heat out of the market, and it still holds up nicely, then it's probably worth it jumping, I think, at this high. So the problem is this high, you're going to have your stop. I would, 255 now, 20 cent stops, probably a bit too wide when the market's extended on both the weekly and the daily. So to me, when I say it's extended, it's not that it can't keep going. It just means, to me, it's a lower probability trade to buy it, and your stops are going to be quite wide. I think if you're really looking at other stuff, there could easily be something else out there that's a bit nicer, where the weekly's in a prime zone, it's extended to the downside, potentially holding up. The daily's the same, and just wait to see what happens into the close today. Still down 58. We could just get smashed today. You don't know. Not trying to scare anyone, but that's a potential. So if you're buying on the open, I would rather let the market settle, see what happens, watch the intraday action. If buyers start to step in, which they generally do midday to later, then yeah, it could give it a crack. Let's quickly do the Aussie CAD if we get half a chance. What was it? Aussie CAD, yep. How do you spell that? A good dad joke, that, wasn't it? Let's go straight to the weekly first. But that weekly's quite bearish, isn't it? So forget about that. The two key zones, this is on the weekly, major zones is right up at, what's that, 103, and it's just broken down through that. So you got support. It's got through 1, 2, 3 touches. It held. So once it rejected off here, it's held a lower high. The thing to watch out for, just on the weekly, I'm just seeing if it could be that's your level down. If you you take that, it's your extension. It could be still heading down 87.40. We'll just have to see, which is a few hundred points. So on the weekly, you want to be biased down, definitely on that one. It's just whether it's extended, which it is. So the weekly is extended on the downside. So again, ask yourself, if I'm going to go short, how much? What's the likelihood of it continuing down before a bounce, and to make my trade profitable? No, what am I doing? Go to the daily. What am I doing? I'm hitting all the wrong buttons today. Go away. Auto. Can't even see it. And also on the daily, it's probably, this is your key. I think your anchor to the downtrend is up here. So you'd be wanting to buy, if you can spike up, hold below the anchor, start to get some pressure again, and then, you'd be wanting to sell. So I'd ideally looking into, just trying to think, a zone, somewhere in here. If it could spike up into there, start to get heavy, and you want to see it, because it's probably going to get a bit overbought up here. So if it gets overbought, last time it was overbought, it was up near the anchor. It gets overbought again, but it's at a lower level. Then you're expecting that daily trend to continue down. Okay, but we'll see how that goes. Shorter term, let's just go down to an hourly, see what's happening on the hourly. And it's extended on the hourly, so this could just keep that in mind. Where are we? Yeah, so it depends what time frame you're trading off, Bobby. So at the moment, the problem is when you get a mix of time frames, long, short, it's just better off staying out, waiting till they line up a bit better. Like this is looking more like a short to me on the hourly, but the daily I wouldn't go short, and the weekly is potentially more a long than a short, although the long's going against the trend. So it's a bit of a mixed bag, if you ask me. Anyway, we'll call it a day there, guys. Down 56, we could be holding up around here somewhere. We just have to wait and see. But yeah, we'll just have to see what happens with the ASX. If this pulls up short at 65 and we start getting a few days of holding around that level, we could be looking at a break up through 66. Just bear that in mind. All right, so I think today, yeah, negative day. We just have to see what happens into the close and what happens in the US. The next couple of days is going to be fairly important, I'd say. All right, guys, thanks very much for joining me. Be in again tomorrow. Have a great day. Speak to you soon. Bye.